Hello beautiful people, welcome back to my channel once again. Today this is CN on the screen. You're watching CN Great Councils and Forex Trade, and here we are on KWAKOL market, okay, which is just exactly the same as Deriv.com synthetic indices. And here we have dump 1000 index on 4 hours time frame. I mean, KWAKOL has it has a very clean price action profile, right? And it's so sweet to trade, right? And we're just gonna be looking at a few things. This is a live account, and we are testing out the broker. I mean, it's so amazing with great features, even on the broker itself, and you can't afford to miss it. You can just try it out and start making cool money. So if you are new on this channel, we talk about forex trading, synthetic trading, in fact anything digital or financial market. We talk about it on this channel, and we give you guidelines, tips, secrets and hacks on how you can trade them profitably and make money to earn a living. So let's just get into this video. Here is KWAKOL dump. Dump is just like crash, okay? While moon is like boom, okay? Then swift is like volatilities, and then power is like jump index, okay? Those are the 4 pairs they have currently, and it's been profitable. Trust me, it's been profitable. Like I said, they have a very clean price action. Let's just get to M1, and of course just take a look at a very clean price action. You can switch between time frames and all that. So but then we want to analyze to know if we can take this trade or not. Okay, now if you look at this market, clearly it's been on a serious uptrend, right? It's been on a very serious uptrend, and I don't see it continuing in a bearish way, okay? And that's what I want to take advantage of. You want to analyze this market now to see if we can get premises that would inform our buying, okay, our longing, okay, on this market right now. So as you can see, clearly this market has been on an uptrend, and if you look very well, you are going to see that the very last low, even though this market is trying to descend, but then the very last low he made, okay, of course this is an uptrend, you know already, is making series of higher highs and higher lows, okay? Now the very last low he made, okay, it's coming back to retest on a diagonal support, on a dynamic on diagonal support, right? So from this impulse move, the impulse move that started somewhere here, okay, now he came down, made a touch, okay, then continued in a bullish way again, made a second touch, and then made an impulse move, creating another high, okay, a higher high, and then he wanted to descend, created a kind of M pattern, but he never got to this support, and then he went back. And on coming back, this is the third time he's making a touch on the diagonal, or diagonal resistance, okay? Now we are considering from here to here. This is 4 hours time frame, okay? Now the market has actually found a support here, right, respecting this trend line, okay, this trend line, diagonal support, right? And if you want to know if this market has actually found a support here, you change to line graph, okay? Can you see this is like a verified support level? Let me bring this, just take a look at this point, okay? The whole of this zone, okay, the market has found a support there, right? And there are other things that inform that is likely going to inform. Let me just put this here so that you see there is a support. So whenever you want to identify clearly support and resistance level or zone, I prefer to call it zone because it's a zone, then you have to switch to line, and of course the whole of that place is a support zone, and it's falling right on the third touch along the respected diagonal support, okay? That's it. That's one. Now, aside that, let's change back to candles. Now, although this appears to be like an M pattern whereby this neckline has been broken and the market is descending down, but then it's resting on a support right now. Okay, the whole of this place is a zone, a support zone. Are we to take this trade immediately? No, that is the answer. Now, you don't take except you have a very large equity and then you want to risk it to take a sniper entry. Okay, now we need to, of course, price got tapped into that zone and then made a bullish move. This is 4 hours time frame, and then it spent up to like 1 2 3 4 5 6 up to 24 hours. Okay, the blue candlesticks you're seeing up to 24 hours, right? Up to 24 hours for the whole of yesterday, right? And then he pulled back and tapped into that zone again, and right on the trend line. Okay, that's like a retest on that trend line. And of course, we don't just get into the market immediately. We need to see that there is a bullish momentum and then increase in volume towards bullishness, right, before we take the trade. But whichever case, if you choose to take, whenever you see this kind of move and you choose to take the trade immediately, your stop loss, of course, is going to be below this zone, so that if price hits your stop loss, you will know, of course, like I said, this lower point, okay, which is of course a higher low, this low is higher than this, and that shows us that price is still in a bullish movement. And of course, this point is still higher than this. Is a low point that is still higher than this previous low. So whichever case, your stop loss is going to be below this zone, so that of course, if price comes down to hit, you know that it's going against you. But aside that, there are other things we can also use to inform our premises and of course inform our decision whether or not to go long on this market. So you can just pull out your Fibonacci. I've made a couple of videos how you can effectively use the Fibonacci level. So since this is a bullish move, okay, we're going to tap at the level, the low point where the market started making an impulse move, and in that case it's gonna be here. So we put there and then we drag upwards. Okay, now if you are doing week to week, you do week to week. If you are doing body to body, that is candlestick body to body, you do that. Right now you reposition it. Okay, remember I drag from down, okay, to up, from down to up. Now you do the opposite for a bearish market. Just as you can clearly see, price is right on the 61.8 Fibonacci retracement level, right? And that's considered to be a very significant level, and just above the 76.4 level. And from what we can see here, we are going to watch out to see how price is going to play out around that level, which is the more reason why we're going to be waiting. Just as you can see, price tapped into that level, okay, and like I said earlier, spent around 24 hours, okay, making a bullish move, and then came back, tapped into that level once again, and we are looking at it bouncing off. But we don't just go into the trade blindly. We need to see how possibly how this very candlestick that just formed now would end, okay, and then we'll see the pattern that is being developed there, and we will know what to do next. Okay, but whichever way, if you have equity to take a snapper entry whenever you see something like this, of course you can do that, but your stop loss is still going to be here. Okay, now this is a very important confirmation, so we are going to actually watch out, and if price eventually drops, okay, to this level, now at this point, now this point is still higher than this. This is a low point, this is a low point. Now this low point is higher than this, so price is still, you know, showing a bullish movement, in that this low point is still higher than this low point. But then if you place a trade, whether or not you place a trade and price drops, okay, at least up to this point is going to be equal low. So in that case, we'll be looking at, maybe on a higher time frame, we'll be looking at double bottom. Okay, and if it drops below, then there is obviously a change of character and then a change of pattern, right? And in that case, it would be a low point that is lower than this. And if you had taken your trade, then maybe and price hits your stop loss, you will consider that price is actually going against you. But at this point, price is still showing a bullish character, and then we have to wait to see what plays out around this place before we place our trade. Okay, whichever case, just as the Fibonacci has given us different levels. Okay, if you place a trade, maybe there's a confirmation of bullish momentum and bullish volume, and you place a trade, your stop loss is going to be somewhere around the 76.4 or shortly below it, depending on your equity. And of course, your take profit should be of course 38.2 at least. 38.2 at least. That is going to give you around 1:1 point something ratio, but 23.6 is another take profit point that's going to give you around 1:2. But the ideal should be somewhere just shortly before 0.0, and that's going to give you around 1:4 or 1:3 point something ratio, right? Okay, risk to reward ratio, which is ideal. Okay, but I remember I said the least you can go is 3.82, that is 38.2 as your TP. So this is how we analyze markets like this. And like I said, KWAKOL dump all the pairs with trade on KWAKOL gives us a very clean price action. And trade it, try it. You can register, check in the description box below. You're going to see a video I made, detailed videos I've made on this, and I'll keep making review videos and coming up with strategies that you can use to trade and make money from this platform. Don't forget that they have a very unique deposit and withdrawal method that is very instant. Okay, and you can make good money from it. This is CN Great Council signing out for today. Don't forget to ask questions and contact me if you need more guide, and I'll be gladly doing that for you. So talk to you in my next video. Bye.